Okay, so I'm going to go through the market update, looking at the bigger time frame from the macros all the way to the major currencies. Then after that, we're going to see, we're going to check out how we did basically for February, and then what will be the plan basically for March, basically from here. So looking at the monthly time frame with the S&P 500, you can see my down arrow through there. In my opinion, they may retest all the way back down to 42.22. However, longer term, in my opinion, is still very bullish. There's nothing dictating that this is going to fail as yet. As far as I'm concerned, a new higher low is being formed. And then what it could potentially do would be something like this. That's one option. Or number two, the second option would be creating a new higher high right there. And then if the first option is going to happen, then this is going to head back all the way down here or down here. But if not, new higher high will occur, higher low, the continuation of the trend will continue from that point of view. So after 3 months, basically, of it dropping, so currently now we are in March, February, January. So after January, March, depending on what you will do by the end of this month. So it could come back down and rebound or some form of a bearish candle. But what we're looking for is a higher low with a clear cut, whether if this is going to be a new trough, like to create a new lower low from here. But if not, higher low compared to last February, that new lower low will be created, then either a new lower high or new higher high will form somewhere sometime in the long run. If a new lower high will occur, then this will drop down to further correction from a bigger impulse since 2020 to the 38.2% and the 50. So we're on 3,800 or 3,500 right there. So those are the two things, two major ones before I can continue. All right, so that's basically with the S&P. And then, so we're in the weekly. I had to create a new higher high yesterday. So if I go through the daily time frame, actually, no, my bad, today, new higher high today. However, it is currently bearish, despite the news of what happened today. It was positive, 58.6 compared to 57.6, and the forecasted one was 58. Construction spending was way more than 0.8, so it's like 0.5 more, and 1.1 more based on the forecasted one. Today we have GDP based on Australia. Okay, so keep an eye on that one. But no, nevertheless, going back with the S&P, retesting about 41.30 right there, mainly the low of this, which is going to be 4105.25. All right, so that's with the S&P. I'm gonna go to the volatility index through here. The VIX is very bullish from last month. However, created a lower high, so it would be very interesting whether it will create a new higher high or not. If it creates a new higher high, S&P will keep dropping, but if not, this is gonna, if it creates from that lower high, creating a higher low, if it breaks out, actually this is from this trend line is based from a lower time frame, but from a monthly point of view, then it could potentially back down to around the 22-24 area mark. Then that means that the S&P is going to continue its uptrend to the upside. So pretty much we're spot on through there. Let me just focus here for a second with the VIX weekly time frame. Lower high, depending on what we'll do, from a lower high, lower low. So potentially the next couple of weeks, I'm bullish with the S&P, bearish with the VIX. So see how it's still very bullish right there for today. It's up 11.31%. Mind you too, there everything is they're reacting to outside environment, which is actually currently the Russia-Ukraine situation. Right, so lower high, another lower high. So this one was a big spike during the weekend when it actually happened. Okay, so the dollar index on the other hand, Looking at the monthly time frame, I'm still very bullish with the dollar index. I believe we have been stating that now for the past few months, especially if they're going to choose to increase interest rates to mainly correct the markets. The markets are just too strong, so we need the interest rates has to go, I mean, to increase in order for stability will happen with the markets. All right, so that being said, still bullish with the monthly, weekly. That's what's happening. It's currently up on the weekly based on today. Okay, so look at that. Create a new higher high, higher low. Question is, can they break 97.735? Odds and probability they are. It's more than likely to happen. But if not, then minor correction again before a continuation of the dollar index or the price to the upside is gonna occur. Oil, and you can see here crude oil broke out 91.14. It is approaching major supply levels here all the way to 107. And who would have anticipated that it will go there really quick? One reason why it went there too fast is because of the Russia-Ukraine situation. And if basically they're blocking off Russia and Russia also basically export some oil, then the demand for oil is also gonna be high. Once there's some form of demand, boom, that's why price is up. So from a trader's perspective, you know, if you've been in the financial markets for that long, in order for the economy to move up or down, you need to have external news that will create fear, will create greed, but mainly fear in order for the price to drop. And if you've been following the markets for that long, you will know that based on cycles, they will create war, they will create a financial crisis, they will create a pandemic. It's almost like there is someone out there controlling in terms of what's really happening globally. And I know that it is probably something you don't want to hear, but it happens. Okay, this is just something that everything is just a narrative. Yeah, basically, there's someone controlling the puppets, and then you have the common people who will just believe in what they want to believe in terms of what's happening. Okay, and this is the advantage of being a trader, is that if you want to see things, it is actually pretty interesting in terms of the way how the global markets are actually they are all connected, and at one point you will see that there's a narrative behind things. Okay, so that's one thing. So everything you see here is all connected based from an event. It doesn't matter, it will be a pandemic, it will be a new virus, doesn't matter, it'll be a new war, whether it'll be the Middle East, whether it'll be on the east side of Europe, so, or if it'll be a financial crisis, basically here in North America. Something always has to happen. All right, and oil is definitely very bullish. Nothing is dictating at this point in time that it's gonna fail. Both the US oil, which is WTI, West Texas crude, and Brent crude oil right there. So it's still bullish. Gold is also up because when there's war or any form, then investors will go to a safe haven like the US dollar or gold, mainly gold in general. And that's also very bullish. Nothing is dictated it's going to basically fail as yet. Breaking out from this consolidation, we can go all the way to 2080 that there has to retest through there. Now, from what happened here in February 24th, actually. Okay, so they're going to retest that high, 1976. And then you have copper. Copper is also very bullish, of course, because of what's also happening then with the dollar. And yeah, so copper is up 2.8% for the month of March with that upper wick. No doubt that they have to retest that. Weekly time frame, same thing. I know it's due to this today. There was a big gap from consolidation and retesting within that high of 47085. Gold. Actually, we already have spoken about gold through there. Okay, so after that breakout that occurred, easy, and that's where we're at this point, up 1.35%. TYX, there was a gap, basically drop today. Overall, on the other hand, from a higher low, in my opinion, there's a continuation of it. Unless a lower high will happen, then this is going to fail once again to the downside. But we'll see when that happens. Weekly, so there was a gap through there, lower high. Next one, either a new lower low, higher low. So got to be aware with that as well, because the yield is the leading indicator of the dollar index. So there could be a short-term correction with the dollar index as well. All right, so that's based on from a macro global economy, from a summary point of view, from what could potentially happen within the month. But of course, it's important to be adaptable and to react within those situations, depending on the plan, depending on your strategy as a trader in general. Okay, so let's look at the majors.
Aussie. Quick question, Ray, with respect to the oil and then the bond. So the oil, tomorrow we have a OPEC meeting. So what can be expected? Will that control the price, or they encourage the price to go up?
Well, because of Russia at this point, they could be limiting. Once there's a limitation of oil, this is going to keep go up, unless they will open up once again. But as long as if there's a lack of supply and there's demand, oil will keep going up.
Is there any possibility, like blocking Russia to sell oil to anyone, like they did for Iraq, right? So
exactly,
is that possible?
I think it already happened. They already blocked off Russia. That's why
from
oil,
selling oil. Okay.
Yeah, that's why that's why oil keeps going up. Yeah, and that's exactly, that's why it will happen.
Except for any humanitarian or any medical expenses, they are not supposed to export oil, right? So Iraq, like sometime ago, I remember that. So
yeah, so I don't know what the other, maybe that's part of the meeting tomorrow, who knows? But if they are going to there's doing a lot of sanctions within Russia, then oil will keep going, and you'll see that gas price will also keep going back up.
Yeah,
it's crazy. Yeah, I think I don't know. I'm not into politics, but I don't think Biden is a good president, to be honest.
Okay. And then quick questions. Yeah, quick question on the bond. So here the treasury bond, 30-year treasury bond, it goes down when the dollar index goes up, right?
No, it should be the other way around, where the dollar index, the yield should be up when the S&P is actually down. So there is also something there to be said.
So what can I relate this bond with?
I'm sorry,
the TYX, the bond, the 30-year treasury bond.
Yeah, it should be the opposite way around, because when the markets are dropping, they should be buying bonds.
I see. Okay, but here it says the change is like 66 cents, right?
Yes. So that could the change is 6 cents. So there could be a possibility that the yield is leading at this point, and the S&P will revert back up, and hence from our analysis, that if the VIX is topping up, odds and probability that it will come back down to correct itself and the S&P will go up is more than likely, and so hence TYX is leading at this point. So with the macro, these are the things that you need to really look into, like anomalies. So which one is leading, which one's lagging?
The reason is like when I see this, the futures market, the bond is going up. So I don't know which one to correlate with the dollar index or the market.
The correlation between the S&P and the dollar index are correct. The yield on the other end is not. That's where you have leading. You have divergence.
Okay.
Yeah, the idea of analyzing the macro fundamentals is to look for anomalies, for divergence.
Yeah. Okay.
Because in a real world, they should be going all together. But if one is leading and one is lagging, then you have an anomaly. So if if you have an anomaly, you have divergence, then that is a good sign. This is an opportunity. That's what you'll be looking for.
Okay.
Yeah. Because we don't do the macros for the sake of doing the macros, right? We're looking for, okay, what is it? Yes, because they are all connected. If one of them is out of whack, then you need to know why is it out of whack? Why is one leading? Why is one lagging? And how is that connected with the currency markets? So yeah.
Okay. Yeah, maybe I will come up with more data, then we'll discuss it tomorrow. Right?
Yeah. All right, Aussie against the US dollar. And it's bullish from last month. Odds and probability that a continuation will occur is more than likely to happen if the dollar index as well is going to basically drop from there. But of course, you have gold and copper being the catalyst of the Australian dollar. And hence, that's why it's also pretty strong. It's only down 0.1% because of copper and gold, not like its counterparts with the euro and the pound. Well, Aussie, anyway, it's not part of the dollar index. It's in terms of geometric weighted mean. And daily, you can see here you have a doji. I am bearish with this one. So I'm gonna look into this one because there's also the GDP, I think, today at 4:30, so which is going to be neat. Okay, so Aussie is a potential sell through there that has a high probability because it's lagging compared with the rest. Euro against the US dollar created new lows. So despite it for very strong, it was down 100 pips at one point. Why? Because of the dollar index being powerful today. Really, really strong. Okay, on a monthly point of view though, since creating new lower low, breaking out from this short term, but if I take this one out, technically next one is right here, 108.53. It's on a free ride, so I'm still bearish with longer term, still bearish with the euro against the US dollar, unless things changes where it will stabilize within this price point about 109.50, somewhere there around this consolidation, which is also that low of that one. I will move that here or here. There. So we put in, which is also has a confluence in this area right there. So in due course, I believe it can go all the way down here, but of course, from a medium short-term time frame, potentially already at demand, it could potentially head back up as a form of correction before it can continue. But still, very, very bearish at this point because of Russia as well, and the European Union being caught in the middle of it all, basically. Right, pound, same with the pound. Very nice at one point. The monthly time frame, on the other hand, could be a potential long. However, lower high here, longer term. As far as I'm concerned, it can go all back down to 120, 118 once again. However, there's a lot of confluence within this area. So that would be a challenge for it. Supply breaking out, demand currently at demand. Weekly time frame.
Is it stabilizing on a monthly basis or
no? It stabilized last month, but right now it is filling that gap. Weekly time frame is filling also that lower shadow through there. Daily time frame, back to demand. Okay, so that's basically with the pound. Looking at the Kiwi against the US dollar. Kiwi, we have a nice piercing pattern, higher low, same. I'm also bullish with this, back to around 72 potentially. Let's see when the base of that happens. So from a weekly time frame, on the other hand, I am not bullish. I want this to come back down to create a nice proper higher low before it can continue to go further. So longer term or medium longer term, I'm basically bearish. Daily time frame, same thing. Back to supply, it's very similar to its counterparts. Aussie and the Kiwi are the strongest out of the whole lot. So basically push it up from yesterday's news as well. And looking at the dollar CAD, because of oil being so strong, that's what's holding the dollar against the CAD to actually rise. So mind you too, though, it is still, you have a lower low through there, but a higher low through here. Since 2015, 2016, it's just within this range. So I'm still bullish with the dollar against the Canadian dollar. That could potentially reach around that 130 mark, somewhere there. So it all depends on what we'll do. Last month actually was good. So when Russia hit, it created a new high, but it came back down, consolidating for the past 3 months. So the question is, can they break out through there to continue to move from November? We'll see when that happens. Potentially, it could, in my opinion, just the feeling as well within those wicks. You can see through here consolidating on the weekly time frame. This is the last low. Based on the higher low, we have a new higher high, but it all depends on what we'll do by the end of the week. But if a lower high kicks in, then a new either lower low or higher low will form once again. But we'll see when that happens. The question is, can they break out at 28.77 by the end of this week? So we'll see when that occurs. Daily time frame from the bearish move. Russia got taken out of the SWIFT, and hence that's why it went up. Friday, on the other hand, so after the very bullish move, corrected itself, everything came back. Everything here within this past week just because of oil being too strong. All right, dollar CAD, couple more. Dollar Swiss. Dollar Swiss is also bullish after yesterday's move because of gold. At the same time, also very powerful. That's why the neutrality, like the dollar CAD and dollar Swiss, there's like a neutrality between forces of commodities. Okay, and then monthly, on the other hand, you have a lower high, you have a dark cloud cover. So potentially, if that's what's happening, could come back down to 91, depending on what we'll do. But if not, from what we can see through there from this motion, if it breaks out and it continue on 61, 97, around that area. All right, so that is with the dollar against the Swiss franc on the monthly time frame. Weekly, very bullish last week, lower high, I believe it's at a higher low, 91.50. Yep, we have a lower low, lower high, lower low, very bullish. Correction, technically continuation. So currently it's a good price point for buying, all the way 92.69 or 280. Last but not the least, dollar against the yen. Last month, 2 consolidation basically in a row. I'm also bullish with this one. The dollar against the Japanese yen could continue all the way to 118, somewhere there, because they didn't want to drop. Technically, if it's really weak, then you should have seen like an evening star through there, but no, it's consolidating. Odds and probability continue 118, 120 in the future is more than likely to happen, but the next supply is that 118.66. All right, that's basically it from the majors against the US dollar and the macro fundamentals. So let's look at performance. Currently, so last month gained 33.34%, better than January. Go through the history through here. Dollar CAD was the major one in terms of the piece of the pie, in terms of what I traded, and currently it was actually it was really nice. I just held on. The longest one was around 22 days. I held for 22 days, February 2nd, and then basically closed it 22 days later. So okay, the thing about trading is that it becomes, yes, you could miss the pieces of the pie in between, but longer term plays, that's also my style of trading, longer term, but takes a lot of discipline to be patient, because there are certain times to control that emotion of discipline in between, like, okay, it goes up and down, I miss those moves. However, then I'm also now diverting against the plan. So it all depends on the plan, part of the strategy. That's what you can see within those losses, for example, even though it was minus 26 pips. However, they are also a hedging from, say, like this one. So despite losing 26 there, also getting 24 over there in terms of the pips, but the position sizing will actually vary. So sometimes this is not really a good gauge, because even with risk management, money management, is that you might have a lot of losses, but your position size are smaller, or you cut down your losses more faster than anything, then that's where you can actually make money. As when you look in terms of the ratios, the risk to reward, 1-to-1, this is 2.5, right, to nothing. So if you have a 1-to-1 or more than 1-to-1, then it's good. So for the popularity, yep, dollar CAD was my major focus, and the smallest one was the CAD yen as a hedging position of the dollar CAD. So that's basically what I shared with you guys basically in the past, in February, one of the sessions. And then so far, yeah, 67.46. Nothing yet. I haven't closed any of the trades for this month yet. I didn't enter. I still have existing trades right at this point in time, which is the dollar CAD. Right, for that's with the manual trading. Any questions there, Bala?
No, I'm good. Thank you very
Okay,
much. Yeah.
cool. And then, of course, we have the Genius bot, which is the difference between manual trading and any form of automated trading is that it just chooses 1 or 2 pips, and hence is why it also doesn't have any losses. So there's only 2 pairs basically traded, Aussie US dollar and the euro. That is it. However, it's more favorable with the Aussie against the US dollar compared to the euro right at this point in time. And if we look at history in terms of time duration, the longest one was 23 minutes right there. But on average, around 5-minute mark. Shortest was 3. Oh, there's 126, 125. Right, so yeah, they do more like a scalping type, in and out, 3 trades in one day. That is it, on average about 1.5%. So pretty good for February. I mean, because January we see this, we only see 11.93 because I started the 20th of January when this one actually ticked right there, 19th of January. I opened it up on the 20th. That's when it started to tick and made 1.53%. So on average around 1.5% basically on a day-to-day basis. So that's pretty cool. I believe in diversification. If you're manually trading, and if you have another type of trading, then that's actually great. So that's the results for February. Now coming into March, of course, the idea is to, especially from a manual point of view, my goal is to always beat the bot and also beat each and the previous month, to keep accumulating through there. All right, that's my report for today. Thank you for listening and watching. If you like this type of videos, please make sure to subscribe to our channel and give us a like. Other than that, I wish you all the very best in trading. Please be aware with the current volatility. Take care until next time. Happy trading. Bye now.